Hi, this is LW Global Finance. Welcome to today's deep dive into the global markets, where we break down the stories that move the economy, Wall Street, crypto, and more.
Have you ever wondered how a single sentence from a world leader can send markets all over the world into a complete tailspin? Well, we're going to trace the incredible chain reaction that connects one comment in Washington, D.C. to sheer panic on the streets of Sydney. It all starts with a story that's unfortunately all too familiar. Everyday people pouring their savings into what seems like a sure thing, only to watch it all just evaporate. For gold investors, a record high one day became absolute heartbreak the next. So here's the big question we're gonna unravel today. How did one optimistic comment about a trade deal cause a modern-day gold rush to just screech to a halt and send shockwaves all the way through the crypto markets? Let's follow the money. Okay, so our story kicks off with gold, the precious metal that's been a safe bet for centuries. For weeks, this massive gold rush was going on, with people lining up for blocks to buy in. And then, poof, the bottom completely fell out. And what's wild is just how fast and how sharp this reversal was. I mean, look at this. After hitting an all-time high of over $4,300 an ounce, the price just plummeted to under $4,100, practically overnight. That's a massive drop of nearly $300. And you have to remember, this wasn't just numbers on a screen. This had a real human cost. The very same people who were waiting for hours in line to buy gold in Sydney were now watching in tears on New York's 47th Street as the value of their investment just cratered. To really put this into perspective, this was gold's worst single day in more than a decade. A 6.3% drop is a historic move. So the question becomes, what on earth could trigger such a massive sell-off? Well, here's the twist. The answer wasn't really about gold at all. The first domino to fall was actually the US dollar. So let's trace this ripple all the way back to the source. And there it is. That's the catalyst. After months and months of a tense trade war with China, President Trump suddenly sounded super optimistic, hinting that a breakthrough was coming. Just a few hopeful words that would literally echo around the globe. So this sudden burst of optimism, plus some hope that the US government shutdown was about to end, it sent this huge wave of relief through the markets. Investors felt way more confident in the US economy, and because of that, the US dollar got a whole lot stronger. Now, to understand what happened next, you gotta get this one key concept. Think of it like a switch in the market's collective brain. Risk on versus risk off. When things feel scary, that's risk off, and investors run to safe things like gold. But when everyone's feeling good, the switch flips to risk on, and they start buying up things with higher potential returns, like stocks. And here's the chain reaction in a nutshell. The easing tensions flipped the market switch to risk on. This made the US dollar stronger. Now, since gold is priced in dollars, a stronger dollar actually makes gold more expensive for foreign buyers. So what happens? Investors sell their safe gold to go buy stocks that were starting to rally. But gold wasn't the only safe haven asset to get hammered. Oh no. That ripple spread quickly from precious metals right into the world of digital assets. And the effect was immediate, and it was severe. Bitcoin, which had been flying high at $125,000, saw its price tumble by $18,000. It's the exact same pattern. As the dollar got stronger, other assets started to look less attractive. So, of course, this sharp drop sparked a huge debate. Was this the start of a new crypto winter? Or was it just a healthy correction, shaking out the nervous investors and giving the long-term believers a chance to buy in? The jury is definitely still out on that one. What we do know is how these things can turn into a downward spiral in crypto. It's a vicious cycle. It starts with a bit of fear, right? That triggers selling. Then, that selling causes forced liquidations for traders using borrowed money, which pushes prices down even more. That creates more fear and, well, you get the picture. Round and round it goes. Okay, so let's zoom out for a second, because all this market chaos isn't just about charts and numbers. It's really a symptom of a much bigger competition playing out on the world stage. You see, the US-China trade war isn't just about soybeans and tariffs. At its very core, it's a fight for control over the rare earth minerals that are essential for building literally everything, from your smartphone to a fighter jet. And in response to that, we're seeing these new strategic alliances forming. This massive deal between the US and Australia, for example, commits billions of dollars to build a whole new supply chain for these critical minerals, directly challenging China's control. And this chart right here tells you exactly why that deal is so critical. China currently processes roughly 90% of the entire world's rare earth magnets. Having that level of control, well, it gives you an immense amount of geopolitical power. So let's tie all of this together. What does this new reality of super-connected markets and geopolitics actually mean for us? Ultimately, these huge market swings are driven by two very powerful, very human emotions. You've got FOMO, the fear of missing out, which is what fueled that gold rush in the first place, and then you've got its opposite, FOMO, the fear of worse outcomes, and that's the panic that causes everyone to stampede for the exits all at once. And the next few weeks are going to be absolutely critical. The APEC summit in South Korea is basically the opening act for a super high-stakes meeting between President Trump and President Xi, all while a huge tariff deadline is looming. And really, the stakes could not be higher. We're facing two completely different futures. One where there's a fantastic deal that could stabilize the global economy, and another with crippling tariffs that could just throw everything into chaos. If this whole episode shows us anything, it's that in our modern world, a simple handshake can move markets just as much as a new tariff. A single comment can create waves across the entire globe. The only question is, what's the next ripple going to be?
Thanks for tuning in to LW Global Finance. What's your take on today's market moves? Leave a comment, share your thoughts, and don't forget to follow us for more updates and analysis.